Good day, grade 12 learners. Welcome to today's accounting lesson. My name is Paddington Zinzombe. This lesson is being brought to you by the Gauteng Department of Education in collaboration with Saibono Discovery Center, and it is being broadcast to you live by Pakama Research and Development. Please take note, this is an interactive session, so we expect to be getting your comments and suggestions as well as questions to us. So please use our WhatsApp interactive number 082 760 2630. 082 760 2630. Thank you so much for being with us for today's accounting lesson. Our topic for the day is stock valuation. So we are going to be looking into this topic, which is new in grade, to you guys, because we never had such in grade 11. But please remember, there are some elements that we started with, especially we looked into inventory systems when we were still in grade 11. So what is it that we are going to look into today? We are going to look into the inventory systems. And you still remember the perpetual and the periodic inventory systems from last year. After that, we are going to introduce stock valuation methods. Remember, stock is inventory, so it's the same as inventory valuation methods, which is a new element that we are introducing to you today. And then we are also going to look into inventory valuation calculations that are going to be very important for your exams end of this year. And then, as always, we are going to look into internal control systems that affects our inventory, internal controls relating to inventories. Please take note of this. When we look into inventory systems, they are different from inventory valuation methods. So we have got inventory systems and we have got stock valuation methods or inventory valuation method. And then on inventory systems, we do have our perpetual as well as our periodic. As always, let's look into what distinguish between the two methods. So we are going to look into the periodic versus the perpetual inventory systems. These are different methods used to track the quantity of stock on hand. And please take note, when it comes to the perpetual, from the word perpetual, it is continuous. Perpetual, continuous. So tracking of inventory balances and cost of sales is continuous. Now, this is the one that they are using mostly in modern supermarkets, where when you get to the till, they just scan the barcode and then they can be able to tell you how much you're supposed to pay. What they are not showing you, which is playing behind scenes, is they can also see what is the cost of those same goods that they are selling to you. So they are calculating cost of sales, they are calculating sales. They are continuously updating their stock. And then when we look into the periodic system, now this system relies on a periodic count. Now remember, periodic, after a certain period. If it's weekly, monthly, it's fortnightly, all it is quarterly, yearly, it depends on the business. But please be reminded, it is good for us to try and count our stock at intervals that are close to one another, because it helps us to detect if there is any problem with our stock. But it says here, it relies upon a physical count of the inventory to determine the number of units on hand. And then using the number of units on hand, we can be able to find the cost of goods sold. Perpetual, continuous. Periodic, after a certain period, we go and do a physical stock count. Now, we also need to look into these as differences. Now, when we look into the perpetual inventory system, the movement of stock is recorded on an ongoing and continuous basis. So the exact quantities and stock types on hand are known. So if we go into the stock records, we can be in a position to tell how many items of these stock items are still there in our stock. Because each time one is taken out, the stock systems are updating themselves. Now, the business that are selling one type of commodity like furniture or cars or computers usually make use of this system. It's very easy for them. And then physical stock taking is also conducted when it comes to perpetual inventory system, but not to find how much are we having, but to just check to say our records versus what we are having on hand. So this is done for verification purposes. We want to verify if what our system are showing is what we really have. So you can see here, we can use the perpetual inventory system when we are dealing with items such as these vehicles. Now, let's also look into periodic inventory system. On this system, there are no continuous update of records as there is movement of stock. Now, this value of the stock on hand can only be ascertained at the end of the period when we have done a physical stock count, and then we can be in a position to find the value of the goods that we are having in stock. Now, it is used by businesses that are selling large quantities of trading stock. And the perfect picture that comes into my mind is in a supermarket. Now, the value of stock on hand at the end of the year is calculated after having conducted a physical stock count. That is periodic inventory system. Now, this system is suitable for businesses where it is difficult to determine the cost price of individual items on a continuous basis. So that's where we use the periodic inventory system. Please take note. Periodic physical stock count after a period. Perpetual, continuously calculating or updating our stocks. Now, when it comes to these two methods, you are going to see that we also do have records for stock differently. We are going to record our stocks in different ways. When it comes to the perpetual inventory system, there is a trading stock account, which is continuously updated, which is representing the asset of stock. So when stock increases, we are debiting that account. When stock decreases, we are crediting that account. And remember, stock decreases when it is taken to be sold. Now, what about when we are dealing with the perpetual inventory method? Then we are not going to have a trading stock account. There is no specific account for trading stock, but we are going to have a purchases account. In the purchases account, that's where we are going to be updating any stock purchases as well as increases in stock. So now we are going to use this purchases account when it comes to the calculation of our cost of sales at the end of the period. Very important. When it comes to periodic, purchases account. When it comes to perpetual, trading stock account. Now, what are the advantages and disadvantages of using any of those two methods? When it comes to the advantages of the periodic, it is a cost-effective method. Because remember, we wait until the end of the year. We wait until the end of the quarter of the year or half a year to go into the warehouse and into the shop and do a physical stock count. So that's where we are worried and check what do we have. But during the period, there is no continuous updating. So because of that, it is less expensive. We don't need things such as barcode scanners as well as other scanning equipment. Now, what are the disadvantages now of this same method? Control of stock is not very effective. Think of a business where we are having our stock items in our storerooms, in our warehouses, in our shops for the whole year without us knowing exactly what are we having there. We are waiting until the end of the year and we go and physically count. Surprisingly, we might find that there are huge losses or some stolen items and we never detected it during the period because there was no physical stock taking during the period. So control over stock is not very effective. Now, if stock is being stolen, it is not quickly detected. Why? Because we have got to wait until the end of the period so that we can check. And when we check, we discover, oh, stock is gone. So theft is not quickly detected. And then the trading stock deficit account is not completed because the business forfeits the reduction of taxable income because there is no trading stock deficit that is ascertained and known. Because the key here is all purchases are taken in and at the end we check what do we still have, and we are going to assume that everything that we are not having have been sold, and we say that's our cost of sales. But is it true? There are some that have not been sold, but they have been stolen. And now if you are using the other method, now you can say, I have got a trading stock deficit of 20,000. Therefore, when it comes to tax purposes, I can put that in as an expense, a verifiable one, unlike this method. Now, let's turn it around, the perpetual inventory system. Now, the advantages includes this. The business can verify physical stock at any time. You just go into the stock records, you check. How many items do I have? It says we are left with 20 items. You go into the warehouse and check. And if there are 15, it means 5 are missing. Something happened. You can detect that anytime by just verifying the existence of the stock items that are in our records. Now, the business can also be able to prepare interim accounts. Because cost of sales is there, we can easily find gross profit any day because the records are updated on daily basis continuously. Now, if there are any errors, discrepancies, or shrinkage in stock that are discovered, action can be taken. We discover it now, we take action today. Now, regular updates of stock help in avoiding deterioration or decline in the quality in stock, as well as having some of our stock being outdated. Think of a clothing shop. With nowadays fashion, it's changing like daily. We are having trends that are always changing. So if you are not careful, you are going to be having a full warehouse with outdated stock items. Why? Because you are not updating your stock continuously. Therefore, this method helps us. Stock can also be replaced on time because we are having continuous updates on our stock, and it can be able to tell us, no, we are only having stocks that last us for a week, for a day, for 20 days. So we can be in a position to make orders and replace stock on time. Very important. And then it also have got its own share of disadvantages. What are the disadvantages of this system? The system is complicated. It requires more accounting entries. Complex, more work needs to be done. And it is also expensive to run this system because specialized equipment is required. You cannot have this system running without computers. You can't have this system running without scanning equipment, without you continuously updating your computer programs and everything. So it means now more costs are there for this method to work. Very important. Now, if you look into these two systems, you can see that I can observe and see that the perpetual system have got more advantages than disadvantages, which cannot be said about the other friend, which is having more disadvantages than advantages. I mean, the periodic inventory system. Now, that concludes that part. Inventory systems. Now we are moving on to inventory valuation methods. Inventory valuation methods. Just to be reminded, so that we continue to go in as a group, we are having our WhatsApp interactive number 082 760 2630. 782 760 2630. Please talk to us if there is anything that you would want to know. Now, let's get down to the stock valuation method. Now, it reminds me my other uncle. He was having a very small tuck shop where he was selling drinks. So he used to go and stock a number of items, and then he would keep them in a small warehouse in the house, and then the tuck shop was functional just like that. So I discovered that when he went to make an order in January, the batch that he bought, every can there was 7 rand. He went to do the same order in February, and the price had gone up by 1 rand. So the price was now 8 rand. In March, he did the same. Now the price had gone up to 8 rand 50. Check something. Same can, price is going up. Now one day I was just sitting and relaxing and not thinking of anything, and my daughter came in holding one of the can and said to me, "How much is this can, Daddy?" For a moment I had to reflect because I didn't know the answer. Maybe you guys, you can help me. How much is a can of Coke? You know, that's when I started to reflect and realize that having a number of items of stock is not enough, because we need to attach a value to the stock items. And that's exactly where stock valuation comes into play. So it became a family debate. My eldest son just said to me, "Daddy, that can, it's 8 rand 50. And then I said, why are you saying 850? What if this can, it's what was left from what was bought in January and the price was 7 rand 50? And my son said, "No, Daddy, we can't do that. Check here. We are going to assume that what was bought first was sold first. So whatever price that we can quote and tell is the most recent price. So we cannot talk of the January price as the price today, but let's use the most recent price." So his reasoning was, The 7 Rand batch is gone. The 8 Rand batch is gone. We are only left with cans that are worth 8 Rand 50, which means we are having the last batch. I thought to myself, first in, first out. The mother weighed in. She said, no, we can't do that. What if this can that my daughter is holding is coming from the January batch? Because remember, we were not following. And she even told us something that we were not aware. She had marks on the can. Now she had an X on the January batch, and she had a Y on the February batch, and a Z on the March batch. So she said, let's check which one is it. It's coming from which batch exactly. And we went on to check. And it was having an Y written on it. And she said, can you see? This can, it's 8 Rand. So according to her, she was saying, let's give specific value to a specific stock item. So let's identify which item are we talking of here and say how much is that specific item. I said to myself, oh, that's exactly specific identification. Specific identification. But still thinking around it, Malume came in. He said, no, that would be unfair. Because check here, the price is changing. It was 7, it was 8, 8.50. Why can't we just add all these prices? And then we divide by the number of items that have been bought so that we find an average price per can. So when we did that, we found that the average was 8 Rand 15. He said, yes. So it means on average, a can of Coke, it's 8 Rand 15. So this can of Coke, it's 8 Rand 15. Having an accounting mind, I said, yes, now I see what's happening. That is weighted average method. Maybe it makes sense. How much is this can of Coke? It's not as simple as 7 Rand, 8 Rand, or 8 Rand 50. We need to find a way of agreeing, and that needs a method. That's where we go to stock valuation methods, inventory valuation methods. That's what we are going to be looking into today. Now, you are going to see that when it comes to inventory valuation methods, we are going to be having 3 of them which we are going to be looking into. The first one, first in, first out. In short, FIFO. What does this method say? This method works on the assumption that whatever was bought into the business first is also going to be sold first. What does that mean? It means whatever stock items that are still there are coming from the most recent batch. So our closing stock is going to be made up of the most recent prices of stock. The next one is weighted average. This one says, no, we are not sure which items are we having. So let's find an average price for all our items. And then when we have got an average price, then we can say now, whatever we have, if there are 19 times the average price, we find the value. If there are 25 items, okay, 25 items times the average value, and then we can be able to find what is the total value of the stock items we have. Check in. The key is you cannot find the value of stock without finding the average price per unit. Very important. The specific identification. This one is simple. it identifies specifically an item and says, this item we bought it for 2,000. So it means if it is still there at the end of the period, it's 2,000 plus the other one that we bought for 3,000 plus the other one that we bought for 10,000. So we just add the prices of the individual items that we bought at different prices. But now for this to work, we must be able to specifically identify the product. Is the product having a specific identifying feature? Are the products unique? Then we can use specific identification method. Now, let's look into it. Starting with the first one, first in, first out. Now, this works on the assumption that the stock that was bought first is sold first. The stock on hand will be the stock that you recently bought. We use it for products like what you are seeing on the screen, your perishables. So this method is preferably used to value goods that have got a limited shelf life, like indicated, your milk, your bread, and all other items that have got limited shelf life. They can easily be declared bad. And then proper packing and displaying is essential. Old stock should always be in front so that people can buy the old stock before they can get to the new stock. That's why you even have got, when you get a job as a packer in a supermarket, they take you for a few courses so that you know how to display things so that customers can be in a position to buy things that were ordered first before they get to the new stock. Now, the value of the stock at the end of the year is more realistic because the stock value is using the most recent prices. We are no longer going to concentrate on old prices. In times of inflation, when prices are changing, it is very good because it tells us the most recent value of our stock. First in, first out. The next one that we are looking at is the weighted average method. When it comes to the weighted average method, it is used when lots of stock is bought in small quantities. And sometimes when you're dealing with small quantities, we can't be able to separate, to say which one is old, which one is new. Think of when you are selling sweets and you want to use first in, first out. Are you going to win? Now, used on products that are difficult to trace the cost price of each item. Think of at the garage where they are selling fuel. Now, today, there was a change in fuel prices. Now, what are we going to say? The fuel that is coming in is priced differently from this fuel that was brought in last week. Because of that, we can't be in a position to separate the fuel and say this was the 19 Rand fuel and today we have got the 20 Rand fuel. Because of that, now we only can find the average price per liter of fuel, and then we are going to use that as our average price. Now, please take note, for this to be able to take place, then we are going to be looking into having a formula that we have got to use. Very important. Now, I usually call this formula the V over hash. Now, the V standing for the value, right? And then this standing in for the number. So we need to know the number of items that we are having in stock at the bottom and the value of the same items on top. Now, let's check what do. We take the opening stock value on top, and below it we put the opening number of units. So opening stock value on top, number of units at the bottom. And then we go to purchases on top. And then now we also need the purchases. So on top we are saying the purchases value. And at the bottom we are talking of the purchases in units. How many units have been purchased? And then we subtract things such as returns on top here, which means we must also subtract the returns number of units. So always the value goes on top and the number at the bottom. But remember, we also need to add the value of carriage. But when you add the value of carriage, it is not going to affect the number. Because if you are ordering 1,000 units and you carry them, it doesn't mean they are going to be 1,010. So it therefore means when it comes to carriage, it only affects the upper part, which is the value, and it's not going to be affecting the bottom part, which is the number of units. The same applies with customs duty. Customs duty is paid when you are importing goods from another country, but when you pay customs duty, it doesn't mean the quantity of the goods purchased is going to increase. Only the value increases. So you see the top part is affected by customs duty and carriage without affecting the bottom part. Please take note. Now, after doing this, we are going to find the average cost per unit. So when we know the average cost per unit, we just left with one more step. How many units do we still have? So if there are 10, we multiply by the cost per unit to find the total closing stock value. Very important. Now, we are going to look into now some more information about these stock valuation methods. When it comes to specific identification, this system is relevant when large commodities are sold and every unit has its own cost price. E.g., when you are selling used vehicles. Even if the same year model, it have got the same features, they will never have the same cost price. So it means now every vehicle is unique. Because every vehicle is different from the other one, the cost price is unique. And therefore, we can easily specify which vehicle we are talking of. Now, we also do use it for things such as machinery. We can talk of jewelry. We can talk of a number of other things. So in this case, how do we calculate the closing stock when we are using this method? We just say how many items are there when we started for this specific model. So if we have got 10 items, we add purchases. They now plus 100, so it's 10 plus 100, 110. These are available. But what are we doing with those ones? Remember, some of them have been sold. So we are going to say minus sales. Some of them we might return them back to the supplier. So we are going to say minus returns. And then whatever we have remaining, we call these the closing stock units. But we multiply by the cost per unit. And remember, this cost per unit is unique. In simple terms, we are telling how many items are we still having, and then we attach a specific price to a specific unit so that we can find how much is the cost of the items we have. A very good example, when we are on our floors in a shop that is selling cars. Now let's go to the specific identification methods. Continue with it. This method works only when a company knows the cost of every individual item that is sold. So you see now, when we are dealing with large quantities of stock items, we cannot be able to see that or know that. But when you're dealing with things such as cars, guys, we can. So it is used for unique items, for big items that have got a unique price. If you go into a jewelry shop, those guys, they know exactly this piece, it's for so much. And they can even tell you from the back of their mind that they bought it from who at how much. Specific identification works. Now, specific identification method works well when the quantity of inventory a company has is limited and each inventory item is unique. The specific identification method can be implemented in business such as car dealerships, jewelry shops, and art galleries. Now, having gone through the theory part, we are now going on to the next section where we are now going to attach figures to whatever we have been saying. Please take note. Our number is still there. You can get hold of us on WhatsApp 082 760 2630. 082 760 2630. And please take note, we are just going to take a 3 minutes breather now. And then in 3 minutes, we are meeting again and we are going to be looking into our first activity. And please take note, it is going to take us down into specific identification as a method of stock valuation. See you in the next 3 minutes. Welcome back, my grade 12 class of 2022. Now, we want to now bring in figures into whatever we have been saying before the break. Now, I'm going to bring in this activity so that it can help us to see how best we deal with. I just want to make you aware that whenever it comes to these three specific methods, they are going to help us to find only one thing: the value of closing stock. Which therefore means if there are any follow-up questions and how do we deal with those follow-up questions is exactly the same, except that we are going to be using a different methods to value our closing stock. So we are going to have three different closing stock values if we do use different methods using the same values. But when it comes to calculation of everything else, it is going to depend on that closing stock figure. So how do we calculate cost of sales? It's uniform. How do we calculate gross profit? It's uniform. How do we calculate any other indicators? It is uniform. But the methods are used for calculating closing stock. So I'm going to start with closing stock first, and then we can get down into anything else. Matrix traders sell three different types of laptops. There is the Lexus, Granite, and Vision. They use the periodic inventory system and the specific identification methods to value stock. So it means they are going to have a physical stock count at the end of the period, and then they value those items using specific identification. So they need to specifically identify which one are we dealing with. Are we dealing with Lexus laptop? Are we dealing with the Granite laptop? Or we are dealing with the Vision method? Now, we are required to calculate the value of closing stock. That's what we need to just do. Calculate the value of closing stock on 30 September 2021, which is at the end of the period, which is after a physical stock count. So we are given information as given here. The following information in respect of the year ended 30 September 2021, our opening stock, the Lexus model. So when we started this period, we only had one model, and it was the Lexus. And please take note, how many units of Lexus are there? 118. Are you there with me? So if we buy any other Lexus, it is going to add to this 118. And please check, this is not going to change the price of the Lexus laptops. Very important. Now let's check what happened with more information. Let's go to information B, purchases and returns. In December, we bought the Granite. Please take note something here. We are not buying any more Lexus. Only the Granite have been bought. So it means the Lexus remains at 118. Are we together there? Hope we are. Now, in December, we bought the Granite. In the Granite, the price, they are 410, and the price is 3,750 for one. I am interested in the cost price per unit. Now, when it comes to March, we bought now the third model, the Vision, and we bought 630 units, and the price is 4,650. So you can see we never bought any model twice. Lexus, we had it when we started. Granite, we bought only 410. Vision, we only bought 630. Okay, now what additional information we have? It is talking about returns. They are saying here we returned some vision model. We returned 20 of them. Now, please take note. What does that mean? Are we still having this 630? No. Why? Because 10 are going back to the supplier. And why are we taking this 10 from these? Because they are specifically Vision laptops that are being returned to the supplier. So what does that mean? It means of this batch, we are only left with 610 units. Please pardon me on that. 610 units are left because we are subtracting 30 from this, 20 from this 630. Now, when we calculate now the value of our closing stock, what is it going to look like? We are now going to check on the saves. Remember, there were 118. And how many have been sold? All of them. Can you see what's happening there? Here, there have been 410. How many have been sold? 356. It means we still have some more left. Not all of them have been sold. And then here, remember we had 630 minus 20 which have been returned. And we were only left with 610. And out of the 610, only 502 have been sold. So how many are still there? We still have something. That's what you are trying to establish here. Because that's how you drive towards your answer. How many units are still there? Now, when you have established to say how many units are still there of the granite, you multiply by the price for one granite. You do the same with the Vision. You multiply by the price for one Vision. And then you can find the value of your closing stock. And when it comes to the Lexus, remember, only nothing is left because we sold all of them. Okay, what is the expected response going to look like when you are dealing with this? Check here. Lexus, how many are available for sale? 118. How many have been sold? 118. So how many are not sold? 0. So we multiply 0 times the price per unit and we get our 0. Nothing is still there. So there is no value or closing stock value when it comes to the Lexus model because all of them have been sold. Let's go to granite. How many are available for sale? 410. How many have been sold? 356. So we say 410 minus 356. We are saying how many are still there? Not sold. 54. It therefore means now these 54 are still there. So we need to give a value to these 54. How do we go about it? We multiply by the price for one. And remember, the price for a granite is 3,750. So when you make this calculation here, 54 times 3,750, it's giving you exactly 202,500. That's what my calculator is giving me. You can also check it there and interact with us on our WhatsApp number if it's not true so that we can correct it. To error is human. I am human. Now, let's go to the Vision now. Vision, we had 630, but they are no longer 630. Why? Because we returned 20 back to the supplier. So it means the ones that are available are 610. always remember the effect of returns on the goods available. When you return to the supplier, it means there are fewer available now to be sold. So we have got 610 available. But were they all sold? No. Only 502 items have been sold. So it means we still have got something with us. How many are still there? 108 are still available. Now, it therefore means we need to give the value to those 108. And the unique thing about them is the cost price for one is known. Each was bought at 4,650. So we are going to use this on our calculator and say 108 times 4,650. And it is giving us 502,200. The last step is the easiest. You just want to bring these two figures together. In fact, the three figures. Remember, 0 is also a figure, right? So 0 plus 202,500 plus 502,200, and it's going to give us this. This is the answer. So this is what was bringing 9 marks into our bag. Not very difficult. It can be done. You can do it. Remember, we are saying a specific model is unique. And because of that, we can never be able to confuse Lexus and Granite. They are unique. And we know each model have got its own unique price. So identify how many of this model are there. And you can even verify it by doing a physical count and find that we have got 54 Granite available. Just multiply by the price. We bought each for 3,750, so we know 202,500 is there. Identify, give a price, done, dusted. We can smile after this achievement. Let's move on. We still have got two methods to go through. So let's see if we can have another activity which tells us what to do. There we are. Our next port of call is the first in, first out, the FIFO method. Comrades Limited sells sporting equipment. The information relates to tracksuits and vests department for the financial year ended 30 April 2022. Now, we are required to calculate the cost of sales of tracksuits using FIFO methods. Now, the key is you can never get to cost of sales without closing stock value. So we need to find the closing stock value using FIFO. Okay. What is the assumption when it comes to FIFO? Stock bought first have been sold first. So our closing stock is made up of the most recent items purchased. That's the assumption. That's what we are basing on. So let's check here. According to this information, we started with 125 units. Opening stock, 125 units. And the value of these 125 units is 40,000. I think it's possible to find the unit price. It's possible. And you know how. We can divide 40,000 by 125 units. But anyway, it's not what we are looking for now. And then, another key feature here is the purchases. Check here, the purchases. Now, the purchases, that figure, it's found after having added all these items. So you can see there are 4 different batches here. The June batch, the August batch, the November batch, and the January batch. So it means we went to buy these items at different times. And check something that is also taking place. Every time we go to buy, the price is changing. In June, it was 330. In August, 340. In November, 345. In January, back, it's now 350. So in other words, can you see what's happening? The price is changing. Now, what does that mean now? It means if we are having any units that have not been sold, they cannot be in the first batch. No, they are made up of the latest. Why? Because when we were selling, we started by selling this 125. After that, we went on to this 120. After that, so we kept on going down. It means if there is anything that is left, it is somewhere in the most recent batches. FIFO. First in, first out. Now, when calculating closing stock, I always say this is the bottom-up method. Now, we are starting at the bottom because we are very sure that the bottom batches are still there. They have not been sold because we started with the earlier batches. The most recent batches are still there because they have not been sold. So it means the January batch can never have gone before the November batch of 2021. So now we want to establish now the value of our closing stock. Now, what do we have in our closing stock? 96 units. But please take note of something. There are 10 units that have been returned, and specifically we are being told from which batch these 10 are coming from. They are being returned from the January batch, which is from this batch. So we say minus 10. It means in this batch, only 90 units are still there. The 10 went back. Though we bought 100, 10 went back. Only 90 units are still there. So when we are saying how many units are in our most recent batch, it's 90. But what is our closing stock? 96 units. So it means this batch alone is not going to account for all the units that are still available. So it means now after taking the 90, we still need 6 more units. Where do we get those units from? We go up. It means it takes us to the November batch. Let's hope it's making sense. Let's hope something is being taken out of this. Now, please take note. Let's take into what the response is going to look like. Check in. Let's start with our latest batch. The January 2022 batch is our latest batch, right? How many units are in that batch? It's going to be 100 minus 10. Remember, the 10 went back, so we are only left with 90. And then 90, what is the price for one? It's 350, which means we are just going to multiply 90 times 350 to find the value, which is 31,500. Is that making sense? I trust it makes sense, boys and girls. But now, before we can even breathe, what else do we need? They said the closing stock is made up of 96. We are only accounting for 90 from the last batch. How many more units do we need to make 96? Then that's where we are going to see that we still need 6. So where do we get the 6? From the next batch going up. The latest one was in January. So before the January, which batch was there? Is the November one. And why do we need to identify which batch? We want to know what was the price in the November batch. And the price was 345. So we multiply 6 times 345 to get 2070. So now this is the value of the 6 units from the November batch. The value of our closing stock. The value of our closing stock. It is going to be 33,570. Please take note. Though it was saying let's calculate the value of our cost of sales, let's not worry about that. Let's not get to the cost of sales. The most important is finding our closing stock, because how to find cost of sales, it's universal, it's the same. And I'm going to show you as we go. So don't worry, we are coming to cost of sales. FIFO method. The most recent stock items are still available because we are selling the earlier items first. First in, first out. One more method to go. Let's check what it says. Weighted average method. Remember, we said weighted average. We want the average price. Before we get the average price, we are not going anywhere. Average price first, and then we check how many units are still available. Let's see how it goes. The following information was extracted from the records of Rolex traders for the financial year ended 28 February 2022. The business uses the weighted average method and the periodic inventory system to value the stock of school bags. Periodic, after a physical stock count, then we need to attach value to our stock. So we want to find the value of stock, value of closing stock of school bags. So you see, different methods, we find different closing stock differently. We don't use the method the same way. Each method tells us how to value our stock. Now, it says, what are we required to do? To calculate the following: the value of closing stock first. After that, we are going to calculate cost of sales, gross profit, stock holding period, and then that is more universal. So I am going to use this activity to try and help in calculating all those and see where it takes us. Starting with the value of closing stock. But there's also a follow-up question, which is going to tell us sometimes a little bit on what we need to do to be aware of and what brings about internal controls. The owner suspects that the bags are missing. Oh, people are stealing. Provide a calculation to justify his suspicion on the missing bags. So we want to ascertain whether bags are really missing, or the owner is just paranoid and thinking, people are stealing from me. Okay, think of what is it that you do if you discover that really bags are going to be missing. We are going to wait and see when we get there. Information. Stock balances. Very important. We are given two pieces of stock balances here: opening stock and closing stock. Opening stock, they were 150 units. I want you to take note of this. 150 units. Closing stock, 635 units. Now, when it comes to opening stock, we are given the number of units as well as the value. But when it comes to this is what the question is all about: finding the value of this closing stock. So by the end of it, we are going to be having a value. Guys, remember, we are accounting people, very important people. And we don't take shortcuts. We don't force things. We allow things to review themselves. So let's go to item B, purchases. Now, when it comes to purchases, we are given 3 batches of purchases. Check these 3 batches. The most important thing that you need to know is, for them to find the total of 2,700, they added this. for them to find the total of 239,400, they added these three. But please take note. The price per item is changing. 82 in May, 83 in August, 90 in January. But I want to bring something new here. When it comes to this, they are also having carriage. Now, when carriage is also added, it therefore means the price for this item, it is 82 rand to buy it in May and 3 rand to carry it. So when we add, it means the price that we are paying per item, it's 85 rands. I guess you can see what I'm trying to drive at. Very important. And then when it comes to the August batch, we bought each item for 83 rand and we added 3 rand per unit to carry. It means each unit ended up paying how much? 86 rand. 83 for buying it, 3 rand for carrying it. Total, it's 86 rand. When it comes to January, we bought every unit for 90 rand and we carried it for 4 rand. So it means we are ultimately paying 94 rands per unit. Now, it is this unit price that when multiplied by 800 units, it's giving us 68,000. You can check it. It's simply now 85 times 800 and it gives us this figure. So check here, the total amount of our purchases includes carriages. It includes carriages. Remember, carriages increases the cost of buying a unit. Now, we want to use this information into finding our value of closing stock. Remember, we said it's going to be value on top and the number of units at the bottom. So we are going to need this value on top and we are going to need this number of units at the bottom. We'll see. Now let's check if there is anything else that they are saying about this. They are saying, on additional information, 40 school bags bought in May. They are specifying exactly when were they bought. In May. And if you still remember, our May is the first batch. Right? They were bought in May and they were donated to needy learners at a local school. Let's hope your school is the lucky school. You are getting 40 bags so that you can use them to carry your books and come to school with that heavy textbook that I need. Okay. Now, is this going to affect our value of stock when we have got items donated? Yes, it does. So we are going to see that when we are calculating the average, the donated stock is going to affect our value of stock per unit, which ultimately affect our closing stock value. And then they also said 2,180 bags were sold at 130 each, and 15 have been returned to the debtor by the debtors. Now, please check here. These have got nothing to do with closing stock. So we are not going to use this one when it comes to closing stock. Sizoibona masifika ku gross profit. So let's wait until we get there. So when we're calculating value of closing stock, we are going to need this item. This one, we need it. But the last item, let's keep it on hold for some time. Now let's go to how do we go about making the calculation. It's going to be simple. Opening stock. Remember, this is opening stock, right? Value. And this is opening stock units. Plus, this is our purchases. Value. This is our purchases. Units. Minus. This is our donation. Number of units. But now we need to give a value to that. How do we go about it? We take the 40 units and multiply by the price per unit. Remember the price per unit. We must include that carriage. Because when we are valuing a unit, remember, carriage increases the cost of buying it. We bought it for 82, but we had to transport it for 3 rand per unit. So it means each unit is costing us 85 rands. So we say 40 times 85, we are going to get this. So this is now the donation value. So please check in. On top, we have got values. At the bottom, the number of units. And then this, when implemented, it gives us the average price per unit. So let's not waste time. Let's bring in the number of units so that we, after having the average price per unit, after having it, the average price per unit, when we have it, we multiply it by the number of units. That's the only logical thing to do, right? So that's what we are doing. How many units are still there in our closing stock? 635. We multiply by the average price per unit to get the value of our closing stock. Hooray! We got it right. We are still on track. Closing stock. Before we move on to calculate the other required items, remember 3 methods: specific identification, specific price per item. FIFO. The assumption is our closing stock is made up of the last units bought into the business. In other words, the last batches dominate our closing stock. Weighted average. Let's find an average price. The value of our stock divided by the number of stock items available. And then when that is done, we can now be able to find our value per unit. Having the average price per unit, we multiply by the number of units, we get it. So that's how it goes. Next, let's find cost of sales. Now, when it comes to this now, there is a formula. Very important. There is a formula. And this formula, remember, after having your closing stock, which is this item, which is exactly this item. Now, after having it, whichever method you use, you have it now. We are now finding cost of sales. It means now whatever information required is the same, because opening stock is not going to be changed by the method. Purchases is not going to be changed by the method. Returns are not going to be changed by the method. Even donations are not going to be changed by the method. So it means now, what is it that we do to find our closing stock? It is, our cost of sales. It is opening stock, add net purchases. Check this word, net purchases. Why net purchases? Net purchases means we already subtracted returns. Net purchases means we have already subtracted returns. Because remember, when we have got returns of goods back to the supplier, it means we no longer have them. They are no longer part of what we are going to sell, so they cannot be included in the calculation of the cost of our sales. And then we also remember to subtract donations and the closing stock. So usually closing stock is a figure coming from the previous calculation. We always say calculate the value of the closing stock and then as a follow-up, calculate cost of sales. So you must have this from the previous question, and then it's going to be opening stock. You still remember this figure, opening stock, plus purchases, the value of our purchases, including carriage, excluding returns. In this question, there were no returns, so it's fine. So, but if there were returns, we should have subtracted them also. And then minus donations, 3,400 donated. Remember those 40 bags that have been donated to the local school. That 40 bags, one of which is the one that was donated to you by the school anyway. And then we subtract our closing stock, and then that gives us our cost of sales. What is key on cost of sales is for you to be in a position to remember the formula. Opening stock, add net purchases. Net purchases excludes returns. In other words, always subtract returns from the purchases. And then minus donations, and we are going to have subtraction of our closing. And please take note, we are using the values. We are using the numerator part of that one when we were using to calculate. Let me just bring this. We are using the numerator part when it comes to this part. Opening stock, add purchases, which are net purchases, minus donations. The only thing that we are going to do is to say minus closing stock, which we have found now. That's what leads to this that we have here. Anyway, I know you guys, you are getting it. And the good thing is, Pakama is allowing us to play this video live now, and we can even replay it tomorrow and the day after, so that we can check again and see if our calculations are tallying as requested. And when you discover there's something that you don't understand, please don't hesitate. 082-760-2630. There is someone always there to try and make sense of what you are asking. So next, what do? We calculate gross profit. I think this one we have been doing it forever. Remember the formula for gross profit. Simple. Sales minus cost of sales gives us gross profit. So now we need sales now. Sales must be brought into play. And then cost of sales, it's what we were doing in our previous activity. And then we can now be able to find our gross profit. Now let's go to sales. Remember, they said we sold 2,180 units. And debtors returned 15 of these. So after selling bags, when bags are returned, it means those bags have not been sold. So in effect, how many bags have we sold? 2,165. And then we multiply by the price per bag. 130 per bag. That's the information we have. 2,165 bags ultimately gone. And we multiply by 130, which is the price per unit. And it gives us 281,450. So this is our sales. The formula says sales minus cost of sales. So it means we need our cost of sales. And where are we getting the cost of sales? From the previous activity, from the previous question. This is a follow-up question. So remember, in accounting, we don't penalize you for a mistake that you have committed previously. So if you are going to see that this, even if it's wrong from the previous question, we are going to award you the mark because you are doing the correct thing. We are worried more about the method more than the accuracy. And then sales minus cost of sales gives us this now, which is our answer, and that is the gross profit. calculate gross profit. We have managed to do it. Sharp, sharp. Still on the same page. The next thing that we are calculating is our indicator. Remember last week, we looked into financial indicators, and one of the indicators that are there is stock holding period. And remember, in which class? Some of you have already forgotten. It was in the liquidity class. So it indicates how long we are holding our stock. So there is a formula for stock holding period. Remember the formula. Average stock divided by cost of sales, and we multiply by the number of days in a year, because our stock holding period is in days. So we need to know how many days. Now, how do we go about calculating average stock? Opening stock, remember it was given, plus closing stock, we calculated it. We add the two and we divide this by 2 to find the average. So average stock is opening stock plus closing stock added together and divided by 2 to find an average. Just for you to know, the average price or the average figure is going to be a figure between 11 and 55,000. It's going to be somewhere in between. That's how you can be able to see if your calculator is not playing games with you. And then we divide this by what? Cost of sales, the figure that we already found in our previous part. So you can see our cost of sales is 90,050, and when you multiply by 365, we get 136 days. It means the stock that we are having can last us for about 136 days. So we even have got to use this to plan and say, when are we going to place orders for the next batch of our stock, depending on how fast we are selling our stock. Now, remember, the last part was saying the owner suspects that some bags are being stolen. So there is a suspecting that there is missing stock somewhere. Now, can we be able to find that from the activity that we are dealing with? Yes. Now, what are we going to be looking into now? We are more interested in the number of units, because when we talk of this, we are talking of the units stolen. So we are saying, let's concentrate on the unit. If you still remember that formula for calculating weighted average, then the bottom part, the denominator part, it's concentrating on units, not on the values. So that's where we are. We started with how many units? 150 units. This is our opening stock of units. And then we added 2,700. What is this? These are purchases now. Sorry, these are purchases. And then we donated 40. These are donations. Now we go on to try and say, where are the rest of the units? Now we have got evidence to indicate that these have been sold. You still remember? There were 2,180 units sold, but 15 of them were returned. So if they were returned, it means we still had them. So only 2,165 have ultimately been sold. So we know where these went to. And then we also know where these are, and these are our closing stock. These have not been sold, so it means we know where it is. In other words, what are we doing? We are saying, how much is available? So we have got 150 from our opening stock plus 2,700 from our purchases. This is available. What happened to these goods? 40 were donated, 2,165 have been sold, which means and 635 are still there. We can even go to the warehouse and look at them. They are there. So if your answer is not 0, it means these units have been stolen. So guys, there we are. 10 bags went missing. 10 bags are stolen. So what the owner was suspecting is true. Now, please take note, whenever it comes to missing items, let's just use this activity as assumed figures. We are not taking this from any activity, but it's always opening stock. We need to know how many units were there when we started. And then we add our purchases. And then we are going to subtract the returns. And this, we call this net purchases. Good. And then this gives us what is available. Always we need to know how much do we have available. After having that, when we know how much is available now, we want to trace where is it now. We are going to say some of it is still there. So these were available, but these are still there. So the ones available for sale are these. And then we say minus those sales. If there are any other activities such as donations, we must subtract them so that we can be able to ultimately remain with the items that we cannot account for. And we are going to declare that these units have been stolen. Hope this helps. Identify and ascertain how much was available for sale. And then tell us where those units are. Some have been donated, some have been returned, some are still there in the warehouse as closing stock. So if there is anything that we cannot account for, it have been stolen. Now, I have brought this just to bring it to your attention. This is in our SIP material, and I do hope every one of you have got this SIP material documents, and this is for session 12 to 15. So if you have not yet had this one, it's coming to you because we are always using our SIP material for revision. Please take note, take it, go through it, because it details you all the items that we need. Like, we need to calculate the number of stolen items. How do we go about it? The number of items on hand. How do we go about it? The value of stock on hand. And then we also look into the methods to say, which method are you using? Specific identification, FIFO, weighted average, among others, and all other items that we are going to need. That tells you, or it summarizes the whole section, the whole part of the syllabus. Please take note of that. Now, let me just bring you into this last part, internal controls. Whenever we are dealing with inventories, how do we deal with situations where some inventory might disappear and we end up not knowing where it is? I mean, some inventory being stolen. I didn't want to use the word stolen because it becomes a crime. Now, what is it that we need to do? Inventory must be kept in a safe and secure place. You know what it means? It has to be logged. Access to that room must be controlled. Movement of inventory items must be recorded. We need to know who took what at what time, every time. And then physical stock count must be done more regularly. Don't wait until 365 days have passed to check the physical stock count of stock. The business must not order excessive stock to avoid high storage costs and inventory handling risks. When people see too much stock, they are tempted to take some and keep for themselves. And then remember, very important in accounting, separation of duties. Every person must have a duty so that we don't have a person who is doing all things and in the end having access to taking other things for their own use. This marks the end of our day session. Please remember, COVID is still with us. Our numbers are going up. So do the obvious things. Social distance must be kept. Sanitize. Hygienically, always wash your hands and make sure that you are not taking this to worse levels. Until we meet again in next lessons, enjoy your day. Thank you so much.